Hey, today we're going to be talking about the auto deduction. So buckle up and enjoy the ride. Hi, I'm Nayo Carter-Gray of First Step Accounting, where we make accounting a little less taxing. And today we're going to be talking about the auto deduction. I find that it's one of the most popular deductions on the planet, but most small business owners don't know what they need to keep track of in order to take this fruitful deduction. So today we're going to talk about the 3 numbers you need to keep track of all year in order to take this deduction. First up is commuting miles.
Commuting miles? What are those?
Commuting miles are those miles between your home and your workplace. If you're getting paid via W-2 with a paycheck, or if you're a small business owner and you have an outside office, it would be those miles from home to that workplace and then back. If you work a second job, it would be the miles from the second job back home. But you'll need to keep track of these commuting miles in addition to the other types of miles we're going to talk about next. Next up is business miles. These are the miles to and from your clients or when you're running errands for your business. For example, if you go meet with a client and you leave from your office and meet them at Starbucks, or if you decided to go to the post office because you need stamps for the business, those would be business miles. Next up are personal miles.
These would be the miles that you drive anywhere other than to meet with clients, run errands for the business, or to and from the workplace.
Those would be the miles, when you go get your nails done, or if you are taking the children out for pizza, or going to the movies on date night. So you want to keep track of those as well. As an added bonus, you can also track your charitable miles and your medical miles, because guess what? They're also tax deductible. Now I know you're asking, why do I have to keep track of all these different types of mileage? In order to take this auto deduction, we need to come up with your business use percentage. And the way we do that is by taking these miles and adding them and dividing them to figure out how much of the mileage is really your business use. Now there are 2 methods to calculate the auto deduction. One of them is the standard mileage rate. We just take your number of your business miles and multiply it by the current IRS's rate. And I'll make sure to post a link so you know what the current year's rate is. Now, there are certain types of businesses that cannot use the standard miles rate. So I'm going to also attach a link for the blog post that goes along with this video that'll explain exactly who cannot use this method. And if you're leasing a car and you use the standard miles deduction, you have to use this method the entire time of the lease. Under the 2 methods, the standard mileage rate is usually the simplest and the one that yields the biggest deduction. But not always, but most times it is. The second method is the actual expense method. Now this one is a little more complicated because you must keep track of all the actual expenses you spend for the vehicle. These include things like gasoline, insurance, repairs, licenses, and registration. Tickets are not included. Parking and tolls are also included. Interest from your car payment is included. Please note, if you do have a car payment, the full car payment is not tax deductible, only the interest portion is. Now, I want you to know you don't get to write off the entire cost of all of those expenses. Remember when we calculated all that mileage and came up with the business use percentage? Well, now we're going to take those numbers and multiply it by that percentage to come up with your deduction. There is a caveat with this method, however. If your business use falls below 50%, you may have to give some of that deduction back, meaning you may potentially owe taxes and interest and penalties for prior year tax returns. So make sure your business use doesn't fall below 50%. One of the things that I noticed that a lot of business owners do is you guys try to estimate these miles. Understand that in order to take the mileage deduction, the IRS requires you to maintain what they call a contemporaneous log, which means a daily written log. But they will accept a download from your app. So if you're using an app to track mileage, good for you because they'll take those. The thing that they're really looking for, they want to know the date of your trip, the starting odometer readings, the ending odometer readings, and where you went and why. If you met with a client, you went to the store, they want to know that kind of stuff. So make sure you're logging it either in your app or in your written mileage logbook from now on. I know, it sounds like a whole lot. In all actuality, it is, which is the reason why I want you to understand what you need to keep track of so that you can take advantage of this valuable deduction and not get yourself in any IRS trouble. At bare minimum, what I recommend you do is take your cell phone and just snap a picture of your odometer reading on January 1st. Not only does this serve as your beginning mileage for the new year, but it serves as the ending mileage for the prior year. So you at least have those 2 numbers. Secondly, I recommend you get an app. But You have to follow me on Instagram to get those recommendations. And as always, keep those receipts. Hey, today we're going to be talking about the auto deduction. So buckle up, because things are about to get crazy. The auto deduction is one of the most popular and most beneficial tax deductions on the planet. But a lot of you people don't know how to claim the deduction correctly. A lot of you people, let's not do that. Okay.